Good afternoon, Scott Redler, T3 Live. Welcome to today's recap. So today felt like a very slow day. Either it was very slow because we had our holiday party last night, or just very slow because it was that slow. Well, anyway, we opened up this morning with a positive note, and I don't think anyone really was so aggressive to the buy side after two really strong days or two decent-sized up days over the past few sessions. So it made sense to digest, perhaps sell off a little bit. But I think towards the end of the day, it kicked in a little bit more in gear where, we were down, I think almost 100 on the Dow, and we almost took back all of yesterday, which is never a great sign. But I don't think it's such a drastic change, but a little bit of a brushback pitch. I've been, doing portfolio approach, trying to have spiders on as a hedge, holding multiple positions, and for some reason I find myself down to, I think, 2 longs and 1 short because I sold some decent stuff into strength, and then I got stopped out of some stuff that I had on as trailers. So anyway, you take a look at the chart of the spiders, and you will see that we've had a really nice move. So you go to the chart of the spiders here, and you'll see that this was your outside day way back when. Fast forward to where we broke above this downtrend, and we're still above it. I personally would have liked to have seen maybe give back maybe a half of yesterday, to have some pent-up momentum, maybe give back right into here. So giving back the majority of it, not the greatest thing you want to see, but I think as long as we hold, just say, above this area, I would think that it's normal as far as what we've seen with this rally, because again, here was your low, here was where we digested and held, then kind of did it again. Remember this little outside day here? Didn't lead to much, led to like a 3-day down move. Then this was your Fed day, another small outside day into the downtrend, led to a 3-day down move. So I would say if we come into this area will be very important to see if we find support. I guess the closer we get to Christmas and the closer we get to where there's no resolution to the fiscal cliff, there is some definitely talk that we could be going over it. And at this particular point, you have that, you have the whole Mayan thing on Friday. So maybe some people are locking in some gains. So with that said, it's always good to sell into strength. Yesterday the banks they continued their tear, and it's always so funny when on TV you have a major analyst say they like the banks after a multi-month move. So that typically means it's time for some digestion. And today, Goldman Sachs was on its 3rd up day. We were talking about saying, not a spot to chase Goldman. Doesn't mean it can't go higher, but entries and exits do matter. You look at Goldman Sachs and you'll see, this was when you want to get your calculated entry when it breaks above a 120 or so, or maybe even, yesterday when it punctures through the prior highs. Not on day 3. So all in all, small outside day. Don't think that this is drastic or severe. Look at how much of this move it held. But if you bought here, you're not feeling so good into the close. If you bought here and you sold some and you're still trailing some, you're fine. I think Goldman could even come down and retest this area as the averages catch up, so to speak. So at this point, it's fine. Just a down day. It happens. Bank of America also. You look at the move that it's had here. Someone else drew on my charts here, but this was your nice breakout above 10. Here was a nice flag pattern for continuation. And then today it opened up, and once it traded back below yesterday's low of 1136, a sell signal, sell some. Okay? Just the whole thing here is, though, if you sell it all, and even if we do pull in just say right here, and then go higher in 2013, selling it here is not good for you. Okay, because you're not going to get back for what could be a bigger move, coming into the weekly charts to the 12 to 14 next year. So on the daily chart, that's why you have to know your time frame and use a tier system, because if you were in tier 1, went to tier 2, back to tier 1 to tier 2, and then back to tier 1, like me, I'm in a little even less than a tier 1, you don't mind holding it. And then if it does pull back to just say this 11-ish area or 1185-ish when the moving averages catch up, I'll buy some back. But if you sell it all and you don't revisit it and you want to own it for later in the year, you might be in a bit of trouble. Here on Apple, not really much to say. You could say it's an inside day, which it is. For me, we had a really nice trade from this 505.50. I trailed it yesterday, and then I took some home. I actually sold some pre-market, and then I tried trading, and I wound up, getting a little, whatever. It was a little choppy today. All in all, if you're still in it, it's okay. For me, I went flat. I just took it as a trade. I had a trailer and it was a nice trade. And now I want to see if it can go sideways. I'd say incrementally, you want to see Apple hold above this 520 to now here 525 and go sideways to have even the hopes of breaking this lower downtrend to maybe head back up in that direction. But if all of a sudden, you look what happened here. Remember we were seeing if it could do anything more than a 2-day bounce. You had an inside day and then it broke. And then once it broke, it wound up breaking, again to get down to the lows. So I'd say on an active micro scale, you got to really watch this area close. And if it were to go sideways, maybe it could break above and get a bit more constructive. But as of now, Apple still has a lot to prove. I'm just using it as a trading vehicle. If it closed above 530, 532, I probably would continue to trail it. But today's action, just got me out of the way. And if it does open up and starts to head above this area, I'll get back in it. But I'm in no need for excess risk right now. And I don't think anyone should have any type of excess risk. If you bring it back to me, because of the time of year we're in. It's December, I think 19th. We're coming into Christmas, New Year's. It's been, in my opinion, a really nice trading year. You've had 3 intermediate trends to trade that acted well. The first quarter, from January up until March was a nice trending market. And then you had another nice move from the June 4th low up to the September highs. And then you just had another nice move from the November 16th lows to where we are now. So you had 3 intermediate trends that were, in my opinion, tradable, that you could have had a portfolio approach and made some nice money. And even on those down moves, you could have made some money short. And there were, IBD put us in correction those 2 times where you could have taken some risk off. So all in all, a really nice trading year. And I think next year is going to be somewhat similar. I think that we could break into the 1500s. I think we see 1550, 1575 at some point. I think there'll be times when it's conducive to have a lot of risk on and sometimes not. And there's going to be some headlines in the beginning of the year to work through, and I'll go over next year a little bit later. But all in all, I think at this point, today's action, not so out of whack. A lot of some stocks took back yesterday, which is a little bit more than some momentum trades would like. But all in all, from where we came from to where we are, today was a day to clean up a little bit. And now if we have the same type of trend that we've been in since those lows, we shouldn't get that much more downside. So if you go back to the chart one more time with the spiders, I would think that this area, I'd love to see it just hold. It broke this downtrend, hold above it for a little bit. But even if it comes back in a little bit, I think that this is, the area that will keep this same type of speed in check. I guess you could kind of draw a trend here, okay, from the gap up of the day after that November 16th. And this would be, a trend that if it were to break, could mean a more corrective process down to even where we were earlier in the week. So watch this trend line, for intermediate guys. As a macro investor, though, I think that, stay with positions you like. Equities are far from dead. Continue to have your plan. Just know, what your time frame is. So with that said, hopefully, you didn't have too much on today. You had some areas to get off. I think a lot of guys came in today. I know when we were giving our 9 o'clock little speech, I was like, I don't have any A+ trades or even A trades. So when that's the case, that means we just had a nice move. It means that you could have trimmed into some strength, stayed with some trailers, and let the market digest / some downside action for us to figure out what the next steps are. So at this point, we'll see what happens. We'll see what the futures are tomorrow. We'll see what the market has in store, and have a good evening, and try and enjoy this holiday season.
Hi, I'm Sean Hendelman of T3 Live, where we train, coach, and mentor traders in order to help you put your money to work with confidence. The T3 Live approach is a blueprint for you to recognize, adapt, and ultimately take advantage of different market conditions. To begin your training with T3 Live, we would like to offer you the opportunity to enroll in our free 30-day online home study course. Fill in your name and email address, and I'll see you on the other side.